Hello, everybody, and welcome to the monthly market memo for the end of April and the beginning of May. I'm Case Eichenberger, the Chief Investment Officer with Retire Path Advisors. And in today's short video, we wanted to walk through some of the key themes that shaped our booming markets for the month of April, a snapback from March, and then talk a little bit about what we expect going forward for May and the next couple months to come. So without further delay, let's go ahead and jump into it as we always do. We like to talk through the returns for the most recent month and give you the honest picture of what stocks were doing. We did see quite a bounce back for stocks, as I'll get into the next couple slides and why. But April, they bounced back from their March lows and reached actually an all-time high on the last week of April and again on the last day of April. So it was just an incredible month for stocks. We saw most of the markets that we track, mainly US stocks, international stocks, small mid cap stocks. They were all up basically 10% if we round up or more just for the month of April. So it was just an amazing return for equity markets. And I'll show you that here for this chart that I am overlaying right now. So the S&P 500 was up about 10.5%. Not to be undone was the small and mid cap market. So the S&P 500 is large caps, mega caps, the companies you know and love so much. Small and mid caps are your up and coming companies. They were up 11%, and overseas stocks were 9.5 to 10% as well. So really just a fantastic month. Bonds eked out a positive return, cash, eked out a positive return. But really, the month of April was about the stock market. It was a total risk-on environment as we got some more clarity on what may happen overseas. Not obviously completely figured out yet, but overall, the market seems to have found that low in March when fell about 10%. And then we've been slowly moving higher as a catalyst is the S&P 500 and the whole stock market earnings picture, which I'll talk about. Year to date, actually S&P 500 up 6, but the best performing market is small and mid cap companies up about 13 and a half. So it's just been a really good year. It's been a good couple years to be a stock market investor. Bonds have kind of done their job for resiliency, coupon payments, and ballast for most of your portfolio. But you're going to get most of your returns from the stock market when it's a bull market, of course. So it's just been a great month of April. And I wanted to show this maybe in a different way, but a monthly return, or maybe we look at it like a 30-day return of plus 10% is somewhat rare. It's like in the top, 1% of the last 10 years, you get a 10% return. So the last time we saw this in the S&P 500 for a calendar month was during COVID 2020. So I'm going to show you that here, but we had, as I mentioned, about 10, a little over 10% return. You'd have to go all the way back to 2020 to see a monthly change, positive monthly change that high, and just kind of paints the picture of where we've been and continues to see this bull market run. So what really were the key themes of April that drove the stock market higher? I think March really set us up for it, but you had in March, towards the end of March, you had volatility really pick up, as I mentioned in last month's video. Uncertainty about oil rose. There's probably still some uncertainty out there, of course. But one gauge we look at, and I look at closely, is the VIX index, and just know it as like a volatility index. The higher the number, the higher the volatility is, perceived volatility is, the higher maybe the fear out there is, the higher and louder the market headlines are about stock markets maybe declining at the time. So at 330, we reached 30 on the VIX, which is pretty high, and that was actually the stock market low. So coincidentally, these things usually happen in tandem. We actually saw a lot of sentiment that was bearish. A lot of people interviewed and surveys taken said they were very bearish on the stock market. That is a contrarian signal, as usually the average is a bullish reading. So whenever you see, a lot of people talking about being bearish or pulling back equity risk, that's actually maybe time you want to look to add to equities or at least stay the course with equities. It's pretty encouraging. As we note, as volatility spikes and bearish sentiment is high, it may be a good time to buy the stocks. So we looked at this, and a couple other firms did, but we were over 30 on the VIX in the month, and anytime the VIX is over that 28 point reading, you see pretty good future returns. So knowing all this data, I think the market shook off a lot of the what was happening. Maybe it's not as bad as what it's going to be, and started to move higher. So when the VIX, the volatility is above that 28 reading, the next year out is about 20% higher. All other levels, it's about 10 to 11% higher. 3 years out, 2 years out, again, higher again, and 3 years out, of course, higher. So that's usually a good time to, as they say, be greedy when others are fearful, as Warren Buffett would say. So, and that's what we've seen in April. It's just an incredible month for stocks. Also, some headwinds that became tailwinds, I believe, for April. Stock market valuations, the price you pay for amount of future earnings, which is all why we want to invest in the market to get the earnings of these large companies, really came back down to average, close to average levels. I'm looking at the S&P 500 here and the technology sector, which is our biggest sector, and then we're looking at the 5-year averages. And you saw the S&P kind of come back down closer to averages. You saw the tech sector really actually come down below average. And coincidentally, it was a really good month for the tech sector. I think it was up close to 20%, double what the S&P 500 was. So as valuations come down, we're a little bit more bullish on stocks. If they rise to an extreme level, we're a bit more cautious on stocks. So that actually told us that there may be some brighter times ahead. And again, we saw that in April. Earnings expectations moved higher, and this was kind of the ironic part. Usually in a bear market, you see earnings expectations fall, but we saw this chart showing that earnings expectations are actually moving higher, showing January 1st, the end of February, which was basically right before the war started, and then recently as April 9th is kind of when we last recorded this. So the US tech sector, again, throughout all this volatility, it just kept moving higher and higher and higher, which is kind of crazy to think about. Again, the US market, emerging markets was also those are those like Mexico and Brazil and South Korea, maybe those are moving higher as well. And even Europe moved higher as well. So this kind of confirmed our thought that stocks could have, a bounce back month, and they did, as earnings were really the picture that was hinging all of this stock market gains on. And expectations were higher, and we've actually seen really good earnings so far this earnings season. So, you know, we put the rough month of March behind us. I think April was one of the best ones in a long time. And where do we go from here is kind of the next question. Looking ahead, I would expect, and we expect oil and gas prices to really stay elevated. They may stay elevated for an extended period of time as negotiations still happen, blockades are happening, different strategies around the Strait of Hormuz are happening. It's really a fluid situation, but for now, stocks are shaking a lot of that headline risk off, and they're really looking at earnings. And again, earnings have been very good. Therefore, stocks have been really good as well. I'm going to show where oil has been. This is looking at WTI, which is our kind of US based oil metric, crude oil metric. And you see it obviously spiked around the war, came back down as maybe there's some good negotiations happening, and then moved higher as of recently. Same thing with gas prices nationwide, right? This is kind of a nationwide average, and I know it's even moved higher since I looked at this last, but regardless, it's similar. So, I don't think anybody wants $100 barrel of oil or 450 in gas. So, a situation needs to be resolved as to get that down, and people can continue to spend on the economy instead of spending on gas for their cars. Earnings may be the catalyst, should be the catalyst, as I mentioned in the previous slide. Very good earnings growth and beat rates across the sectors. And then just be opportunistic. We've seen a lot of volatility kind of fall here. Again, typically when it's high, you want to look to maybe see if there's any dry powder you have and add to the stock market. But when it's kind of on the lower level like we are now, you shouldn't expect another 10% month in May. So we'll have to see. But April, I think, was just a fantastic month for various reasons. But typically when volatility is high, it's a good idea to start to look to put money to work. And we saw that, the VIX, as I mentioned, volatility is is was at about the 90th percentile, came back down to near average. I also like to look at high yield spreads. What's the yield you get for owning a high yield bond compared to treasuries? They were a little bit higher, not completely higher. Now they've come back down. Not a lot of reason to take risk there. Obviously, the drawdown of the S&P 500, we drew down about 10%. That was about in the 50th percentile. Kind of an average year is, kind of that 10% range, at least over the last 20 or so years. And now we're basically at all-time highs, so we're basically zero. So we put all those together in our own proprietary score, and we were at 62 down to 29. So easy slash hard money has been made. Obviously, it's hard to stick through these events. So, we're always here to help guide you through that. April was a great month to recap, really hinged on earnings and some overseas volatility kind of winding down or a little bit more clarity. But just still continue to be vigilant, continue to be diversified. And of course, always reach out to us if you have any questions because we approach management of your complete financial landscape very seriously as a trusted steward, advocate, and confidant. We're completely committed to you, the client. As always, please reach out to us, your advisor, myself. Call us on our phones or emails. A lot more good stuff on our website, other videos I produced, and other written versions of interesting market takes. So you can always find more information there. And we just hope you're having a fantastic spring and getting geared up for the summer 2026 season. Thanks again, everybody. Take care.